In this video, you will learn number one, how to grow small trading account with synthetic indices. I'll be showing you how to grow your small trading account using only one asset on synthetic indices. Number two, I'll be giving you some important updates on synthetic indices that will help you save a lot of money. There are some things that are going on synthetic indices right now that if you don't pay attention to them and if you don't switch with the way you trade with them, they are going to cost you a lot. A lot of things have changed in the past days and I'll be revealing all of them to you in this video. And number three, you'll be learning a significant trading strategy on volatility 50 for raising small accounts. This strategy is so good and it does not only work on volatility 50 but a lot of synthetic indices in the market. But the reference of this video will be volatility 50 because it will help us to raise our small accounts. Now, let's get to it. Alright guys, welcome to the best synthetic indices trading strategy, and this is the best channel that you will learn about Deriv synthetic indices and a lot about the markets. All we do is trade Deriv synthetic indices alone. We don't trade any other assets in the market, just synthetic indices. And today I'm going to be telling you how you can raise your account. But before we get into that, I want to make sure I tell you guys the latest thing that is happening on the Deriv platform right now. Now, there are some changes that I've seen in assets, lot size, and the rest. And these changes are going to affect a lot of traders. These changes are very important for every trader. If you don't know about these new changes, you can risk losing a lot of money in the market. Now, the first one is the lot size. The lot size are changed for some assets, like for example for volatility 75. Volatility 75 used to have like 0.0005, but now it's 0.01. All right, so let me go back to volatility 50 and show you something else. Now, this one is not just on volatility 50, but it is happening on all the assets. They have changed their spread, so sometimes now you can place, for those of you that like to trade with limit order, you can place your limit order here and you will see the market get close to it and it will not hit your limit order. Can you imagine that? Let's say the market gets to this your buy limit now, but it won't hit it. Let me show you what I mean. For example, the market was moving, then it came to your buy limit here. The market will not trigger your buy limit and then it will start going back and it won't trigger your buy limit. So for those of you that trade with buy limits, if you want to trade the next time, just make sure that you are always there to be checking your trade. Be checking when the market gets to that point. You can just delete your buy limit order and then you place your trade directly. With that way, you will enter a trade that you wanted to enter without waiting for the market to fill it. The second thing now is the stop loss. Please, if you are trading with a stop loss, if you are trading with a stop loss, make sure that your stop loss is a little bit above or below where you place it. For example, now I'm just using this thing for example. It doesn't matter if it's a buy limit or any other thing. Let's just take example. For example, let's say you place a stop loss at this point in the market, this point here. So you need to take your stop loss a little bit higher than that point. If you want your stop loss to be at this point, fine, but if you are sensible in this period, put your stop loss a little bit above the area or below the area where you are going to place your stop loss so that the market won't hit it. Nowadays, I see a lot of crazy stuff on the Deriv platform. And I think this is some technical issues, and I believe they are going to get to it because Deriv have been working for us for years, and all these minor issues, I know that they are going to do it to I know they are going to correct them. But for the moment, guys, make sure that you place your stop loss above the area where you are going to place it. The markets can just move to your stop loss here, and it's not supposed to hit your stop loss, but it will hit your stop loss. That's that's the new something now. That's the way it works now. You place your stop loss where you didn't want to place it. Where you place your stop loss at a zone where you want the market to not to get to, and the market won't get to your stop loss, but it will hit your stop loss. So guys, be very careful about that, so that you won't fall victim to it. So make sure that you always place your stop loss a little bit above where you are supposed to place it. It may cost you a little cent, but it can save your trade. Sometimes the market can just get to your stop loss level and start retracing back. It has happened to me a lot of times, and I believe it has happened to you guys a lot of times too. So make sure that you get all those things in perfect condition. Now that's something I have to update you guys to make sure that none of you fall victim to all these new rules and conditions on dairy platform. Now, so let's get to the strategy that we want to trade with this. So if you have a small capital, this strategy is just for you, and it is on volatility 50. You may say, why do I choose volatility 50? I chose volatility 50 because it has one of the lowest lot size in the Deriv market. If you go to the smallest lot size, which is 4, you will see that it is very low. You can trade it with a very low capital. You can see it is very low. The buy limit is very low, so you can trade it with a very low capital. Look at this. So now, since it has a good potential for us to trade the market like that, we need to know how to trade volatility 50. And mind you, you can use this strategy on any other asset on Deriv platform and you'll be good. But I want to give you the context for volatility 50 so that you can trade volatility 50 and be able to make money from it. Now, since you have a small capital, what you have to do is that you have to understand the trend of the market. Now, I always say this and I will always say this. If you are not following the trend, you are not trading. Some of you guys think it's all about market structure and all of that, but the truth is that the market is all about its trend. If you don't know how to follow the trend, learn how to follow the trend. It is very advisable to learn it. And the best way to learn it is to just to observe observe how this market is working. It's very simple. Even a kid of 4 years old can tell you that we are currently in an uptrend here. This is a pure uptrend. Everybody can see that the market is going up. It's going up. Although it has some little retracement from the sellers, but the main direction is up, up, up. So when you have a trend and you know the trend already, you need to understand how you can benefit from the trend using different strategies. All the strategies that we have in the market are supposed to work along with the trend. So you discover the trend, you now get a strategy that will help you to follow the trend. That's how it works. Now, let me show you how our strategy works. If I already marked out some of this strategy, so we call this the institutional double bottom. This strategy is very powerful in the market. So the way it works is that it works with a break of structure. So the first thing you have to see this market break a structure here. Let me draw horizontal line on it. Like a horizontal line. Let's make it black color. Mix. So right here, the market broke the structure. This structure, they broke the structure here. So right here we have the market breaking the structure. See, the market broke a structure here. So because of that break of structure, we know that the market is going to return back to the zone where it had the power to break the structure. Now, how do you get this zone? All you have to do is draw a box on the lower wick of the last candle. You draw a line on the wick from the lower wick of the last candle. On this trade, this is the last candle here. This doji candle, that's the last candle there. So because the last candle, you just draw your box below that the wick of that doji candle, below the wick of the doji candle. When you have drawn your box below the wick of the doji candle, then you wait for the market to break a structure. So when the market has broken a structure like the way it did here, you want the market to now turn back to this box. So when the market returns to this box, that is where you are looking out for to trade. Now, when you look at this, what comes to your mind is that, okay, can I use a limit order on this strategy? Can I use a limit order on this strategy? The truth is that you can use it, but it is very risky. So I still prefer you don't use it. The best way to get the best out of these trading strategies is to use an entry candle. And two of the best entry candle in the market is the pin bar and the engulfing candle. By now you know about pin bar and engulfing candle. If you don't know about them, you can go and watch my previous videos. You will learn a lot about them. I've used it on many strategies, and even if you don't know them, you can identify them. So right here we have a pin bar. Yeah, this is a pin bar here. So when you see a pin bar, you can now take your trade. So when you have that pin bar, you can now take your trade. So for example, now let's say I took a trade here after I saw this pin bar. Then I put my stop loss here. That is $1.93. If I place my take profit target here, I'll be making $7.56 for the trade. And if I place my stake profit target at the top here, I'll be making $12.84 per trade. Now, if you are familiar with the way we trade in the market, you will understand that sometimes we have TP1 and TP2. So if the market will not hit TP2, we can still be able to make money on TP1. So sometimes, if you like, you can stop at first TP, that TP1. But if you want to make more profit, you can go for TP2. But make sure that you at least take your profit at some point around the first take profit target. So your stop loss should just be placed below the pin bar. If the setup was right, the market will never move below that pin bar, and it will just keep going from there and hit your take profit target. Now, this is one example. Let me show you another example of this on the chart. So previously, you can see that this market was moving in an uptrend. You can see. Let's place our line on that structure. The market broke this structure here. Now, the reason why I trading setup is not because it broke a structure. Sometimes you have to make sure that the structure, like the setup, is large. For example, now, since this market broke its structure here, I drew my box at the lower wick of the last candle. Now, some of you will ask, okay, what if the candle does not have any lower wick? Just draw it at the last low of the candle. If you notice that the candle does not have a lower wick, just draw it at the low of the candle. That is for an uptrend setup. And if it's for a downtrend setup, draw it at the high of the candle. That is if the candle does not have any lower wick for a for an uptrend, and a higher wick for a downtrend. So the reason why I took this setup serious is because here I got this lower wick here, but instead of the market to start to come down to this point and give me an entry, it started moving up again. If the market gave me an entry at this point, I will not take this trade because this setup is very small. The reason why a lot of traders fail in the market is because they trade very small setup, and this small setup always have one goal, and the goal is for them to milk your profit out of your trading account. But if you are wise, you will avoid that. So avoid very small setup like this one. Wait till it's enlarged, till it's grown before you start looking out for entries. So right here you can see that this did not give us any entry here, but when the market came to this point here, it gave us an entry, an engulfing candle. And like I told you guys before, we have only two entries that we normally trade the most in the market, which is the engulfing candle and the pin bar. I already given you a pin bar example. So you can now take your trade when you see that engulfing candle, and you will make money from the market. Now this strategy is very simple, and if you use this strategy, you will see yourself making a lot of profit from the market, more than the way you are making profit already. If you are new to this channel and you have not already subscribed, please subscribe to the channel. It helps us to help more traders to learn about synthetic indices, which is the best financial asset in the market for traders. Whether you are starting small or you are starting big, this asset will help you to grow your account fast and reliable. Almost all the trading strategies in the market work on synthetic indices. Even the ones that won't work on currency pair, they work on synthetic indices. If you want to get your account ready, click the link below and sign up with the broker that we use, and you will start making your own profit in the market. So sign up with the broker we use, and I give out daily signals on Deriv synthetic indices. This is the only thing I do. I trade synthetic indices, so I give out great signals on synthetic indices every single day. If you want to join our VIP signal group, the link is also in the description box below, guys. So I've taught you guys how to avoid your risk in the market, how to make sure you're not caught up with a broker. You have learned a good trading strategy which you can use to make money from the market. And I want you to go into your chart and start looking out for this strategy. I mean, test them. Make sure you test them so that it won't just be that I told you guys to trade this strategy. It will be that you will look at this strategy and you will realize by yourself that, wow, this is a good trading strategy and I want to work with it. All right, guys, I will see you in the next one.